Morning, everybody. Thanks so much for joining us today. Appreciate it's the beginning of summer and lots of people are rushing around, so we're glad to see you this morning. I'm Alan Butendag, I'm your host. I'm also our National Insurance Consulting Leader. Delighted to have everybody with us today to discuss a very emerging and exciting topic for us around insurance modernization. We've got a panel discussion today, and I'll quickly introduce them. We've got Kristen Gabriel, who's a director out of our financial services risk and regulatory practice in the United States. She's heavily focused on compliance and process improvements and has a vast number of years' experience working with insurers. Joining her is Byron Innes. Byron's a senior strategic advisor to PwC based out of Toronto. Byron's career has been focused in the insurance space, and he's assisted a multitude of clients in a variety of different transformation initiatives. And lastly, we have Chris Joline. Chris Joline is a partner in our U.S. practice with over 15 years of experience serving the insurance industry. His areas of focus include operational risk, internal controls, as well as regulatory compliance. Chris and his teams have a number of ongoing engagements both in Canada and the U.S. with some of our insurers here. So I think we've got an exciting team here to spend some time, and I'll pass it over to Chris, and we'll keep you on time, and we'll save some time at the end for questions. Thanks, Chris.
Great, thanks Alan. Really what we want to do today is kind of introduce you to our concept of insurance modernization. This is, we want to take you through what we think insurance modernization is. As we go through it and you hear more about it, it's a lot of the components that we see going on in insurers today. It's really just kind of bringing those pieces together, breaking down the traditional silos. We're also going to go through kind of who is impacted by insurance modernization and how we've been approaching kind of scoping that out and really talking with our insurance clients in the U.S. and across the globe around how they should be thinking through this. And one of the interesting things for us, this is something that we came up with as a consulting group, as a cross-line of service group, really, because we have insurance, we have tax resources, we have the whole team on it. And one of the interesting things is, as we've been out there, we've talked to risk folks, we've talked to actuarial folks, we've talked to finance, and we've talked to technology. And it resonates with somebody different in every organization. The messages are always really well received, and rather than a typical type of presentation where you have a presentation, people go back and think about it. It's like, wow, what do we do next? How do we begin to educate within our own organizations around this? So we'll get into that. We'll then get into what we've seen, what we've been doing with clients. What's the approach? I guess the main thing that we've seen around the approach is there's no one size fits all, right? It's definitely based on the culture and where your organization is overall. And then we'll take you through a maturity model that we've built. So we call this the RAFT: risk, actuarial, finance, and technology. You can change those letters around, but it doesn't always work that well. So we started with finance, is all I'm saying. We ended up with the RAFT. We'll just put it that way. And then we'll open it up to a dialogue and really kind of just take you guys through all of that. So. What is insurance modernization? Insurance modernization, we see a number of different factors impacting the insurance industry. We see various regulations coming across the globe, right, from the IAS, many different regulations in the U.S. for sure, with the Fed now supervising some insurers. We see the NAIC continuing to move on various things. In the U.S., we see FASB and IASB kind of making different accounting pronouncements and different changes to how actuarial reserves are going to be set. The FASB in the U.S. has really been focused on changing insurance contracts, and that has gone back and forth multiple times for those of you who have been following that. And now they are talking about focused, targeted changes. Nobody knows exactly what that means, but we think it might have a quicker timeline. And what we see really is we see folks reacting to those different things at different points in time, right? And okay, we're going to take insurance contracts and we're going to fix the actuarial pieces for that. And we're going to show how we get those numbers to finance in a very focused way. What we're saying is, don't take these as one-offs. Take these as more of a holistic type of opportunity to not just get to compliance, but get to a more efficient, better process. I was talking to somebody earlier about data in the organization, and there's a ton of data. And what we're saying is take the time now to think about how you want to harness that data, how you want to aggregate that data, how you want to get to that single source of the truth. One of the actuaries that I work with, Rich DeHaan, he came up with the ripping up the road more than once. And what ends up happening, and what we even see is, the actuarials will service our actuarial clients, and the advisory folks will do more of the operations work, and the technology guys will work with the IT departments. And what we've seen is insurance organizations are really ripping up the road multiple times for multiple different projects, when probably 60 or 70% of what they're doing in each of those individual silos have common threads within them. So we're working with clients to really develop a target operating model to say, here's where you want to get to, here's where you as an organization want to get to, and work with you collectively with all of the different stakeholders to make sure that you're really building out that message. And either one of you want to add anything to the insurance, what it is?
Just to say, when data and technology underpin all of the other functions, that ripping up the road concept becomes really important, because what we've seen clients do is start to go down the road for a given reason and say, we need to clean up our databases, we need to invest in a bigger technology solution, and it's not necessarily meeting the needs of the broader organization. And so taking the time to really assess that, we've seen a lot of success there.
Yeah, and I think some of the things that Chris mentioned about all the regulatory changes that you're having to do and are seen as, by many organizations, as just expenses. We have to do this because, and it's just a big pot of money we're throwing out there. Whereas this approach allows you to maybe get some value out of some of those initiatives, right? And to get a payback on those initiatives where you actually are changing things in order to get the data you need, or the compliance aspect. So getting value from the exercise.
Yeah, and Krista and I have spent our careers really helping folks get through regulatory change within insurance companies. And many times the end game is to get to compliance, right? What we're saying is bring in the additional stakeholders and sort of leverage that, understand what their needs are and what they're trying to do within the organization. What we've seen a lot of organizations doing is almost doing a project portfolio analysis. What are all the different things that we have going on within risk, within actuarial, within finance, within technology, and how do they intersect, right? And what you end up finding out is many times if you just take the time to do that and you bring the right folks to the table, you end up getting a much more efficient approach overall, and you're really working towards that 3 or 5 year plan that you should be as an organization.
Well, I was just going to add to that. I'm working with a client now who the driver for them in kind of attacking the insurance modernization isn't the regulatory requirements. That's on the list, but probably 3rd or 4th down. It's really more of an efficiency play for them, a cost reduction play. So the idea of looking collectively cross-function at modernizing the technology and the processes and the organizational structure is really driven by the need to reduce work effort, cut costs, so on and so forth. It will, as a byproduct, also achieve the regulatory requirements. So it's just different clients look at it from different perspectives.
Which way, John?
Yeah. So this slide that we typically go through around why modernize, why do it holistically, and why do it now. The now piece is really simple. It's around you need to do this because there are going to be a number of changing regulatory requirements, and quite frankly, if you don't do this now, your competitors will be doing this, and it'll put you at a competitive disadvantage. You'll have less access to information. You won't be able to prepare as much in business decisions. And I think that just beginning to think through this now as an organization as to where you want to head moving forward, given all the changing regulatory landscape and all the access to data that you currently have, is a pretty important message. I think one of the things that kind of goes across all of these is the efficiency play. We've certainly seen in a number of the clients that we've worked with that efficiency is something that there are significant efficiency gains that you can have, whether it's from a people, process, or technology perspective. I'll just give one example. So we're working with a large insurance company who has operations in Asia, Canada, and the US. They're going through a stepped approach to modernization. So they've got an initiative going on in Canada. They've got one going on in the U.S. The CFO sits in the U.S. and another firm was helping them with a piece of their modernization effort around the finance area. And they came to us and said, this firm says that there's a 40% gain in how we can redeploy our actuaries, right? And can you help us validate that? And at first, that seems like a pretty significant gain, right? To be able to take 40% of your actuaries and rather than having them in the gathering data and reconciling data phase, more in the analytics and helping you make better business decisions and underwriting. And think about the power of that within an insurance company. And we took a look at it, and we're doing virtually the same thing in the US. And we say, you know what, we think that's table stakes. Like, we think you might be able to get to 50 or 60% of redeployment if you follow these specific, type of initiatives moving forward. So it's a matter of, from a human capital perspective, I think you're going to have a much better handle on being able to utilize your resources for the right types of things moving forward. So there's some other pieces here. I think that Byron touched on it earlier. I think rather than just getting to the compliance factor, if you really think through this, you can really build some value within the organization. You're going to spend the money anyway to get compliant. It's a matter of really thinking through where is it that we want to head. Anything else you guys wanted to mention on this?
I was just going to say the internal silos, I think, is another big driver that we've seen at many of our clients. I mean, when we talk about insurance modernization holistically, right, the flip side of that is really looking at your organization holistically and not just understanding a particular function or geographic region of the company, but really breaking down those internal silos, because the efficiency and lessons learned cross-organization will probably be the greatest understood as you look across your own organization and start to break down some of those silos. Yeah. Find redundancy, duplication, whatnot, that all can be eliminated.
Right, and I think that gets to the bottom on the bullet on the bottom of why Modernize Now, the linkages to kind of the current in-flight projects. You all have these types of projects within the raft going on within your organization. Taking the time to analyze and figure out where they might have some intersections, we think gets you to a total cost efficiency overall on projects, right? There are certainly some growing pains in the beginning to get everyone on board and get, it's harder to get 3 different distinct groups together to agree on the objective than it is to just say, we're the risk folks and this is how we're going to do it and we're going to move forward. But what we've seen is it's rather beneficial in the end. I guess the place that we've seen it the most is with the actuaries, right? Yeah. Is the actuaries, historically have really taken data from wherever they can get it, and then they normalize it and they massage it, and they spend a lot of time doing that. By the time they're done doing that, they've got a day or two to analyze it, right? What we're saying is move more towards a straight-through processing type of environment. Get away from actuaries doing IT work and bring the IT folks in to really make sure that you're leveraging those capabilities within the organization.
And building on that, one of the things that came out and resonated with me very strongly when our global team met on this whole topic in Hartford a few months back was to get to a single source of the truth.
Yeah.
Right? Get one version of the truth, whether it's risk, whether it's actuarial, whether it's finance, it's one set. And we can all work with that.
Yeah, even if you have 25 administrative platforms.
Right.
No, everybody here has one administrative platform, right, in their company? Back. So we talked about the rationale. I think it's really a convergence of not just regulatory issues, but also all the data and technology issues that are out there right now. And there's certainly big changes coming to information reporting. These are just some of these bubbles that we have on the page are just some of the things that we think are going to impact this longer term from a regulatory perspective, as well as from just a competitive pressures perspective. And you talk about better metrics. Some of the information that's out there, some of the information reporting is going to be required. Certainly, it requires you to have the availability of better metrics moving forward. These are the things that are going to be driving people in silos to go react to things. So what we're saying is take a look at these in aggregate and really begin to focus on how you're going to organize. And Kristen will get into how we've seen folks organizing and just some thoughts around that a little bit later. Anything else on this, guys? So we think about, sort of what are some of the benefits of modernizing the organization. Certainly improved analysis. If you can begin to get to that one source of the truth and really begin to think through how you can really make sure that you are going to one place, getting more straight through processing, really understanding how this lays out, that's certainly a huge improvement for insurers. Also improved stakeholder communications. When we think about risk, actuarial, and finance, and they're going against perhaps different data sets, looking at things differently. Today, you in the organization, risk and actuarial and finance may have different numbers for the same type of metric. Getting to that single source, you have improved stakeholder communication, and you have better consistency. Process efficiency, we think not just from a project perspective of all these various projects going on, have many overlapping factors, but also from a perspective of really how are you going to deploy your resources, how are you going to manage your technology, all of those types of considerations. We think this becomes a much more efficient process overall, and the processes within that. The one that I know is near and dear to many people's hearts is the governance around this, right? Whenever you're moving large groups of data and massaging it, it's obviously much better governance if you can get it to one central source. And really, that also enhances the controls, right? So you have better governance and controls around these types of things. And I think one of the things that we don't always think about is how long sometimes it takes to get information from a timely perspective from an insurance company and how the analytics work. So the more access to that information, the more access you're going to have to really timely decisions that you can inform management on. And then just greater transparency overall. These are just some of the things that we've seen our clients begin to realize as they begun these journeys. And like I said, no one has started at the same place. It's interesting. We have discussions with some of our top tier clients all the time, and it's always starting at a different point. Sometimes it's within finance, on a finance transformation. Sometimes it's within technology as they're trying to rationalize the portfolio. There's a number of different ways.
Sometimes it's within HR, from a people perspective, right? I mean, we've seen it from
every angle. We call it different ports of entry, right? We look at it as these things are changing in the insurance landscape. Insurers are finally being forced to kind of change with it. And as a result, it's time to really think through how you're going to organize and sort of bring the group together. So, any other benefits you guys want to go through? Good. Okay. One of the things that we've been doing as a firm is we consider this kind of constituency-based, as I was just talking about, coming from multiple areas. So we've tried to develop the voice of all the various pieces within the organization. So Byron's going to take us through kind of what we've been thinking. We call this our Wheel of Fortune. So these are all the stakeholders on the wheel. We've got some direct, some indirect, and Byron, why don't you go ahead and take us through that?
Yeah, so Chris has already talked about the major audience for this being risk, actuarial, and finance, and those are direct stakeholders in this whole modernization initiative. But there are others as well that are illustrated on this wheel. But importantly is the bottom half of the wheel, which is the indirect stakeholders on that. If you've got access to better data, more consistent data, as we said, single source, that data can be used in marketing initiatives, product development, underwriting, a whole raft of different things. So one important thing here is getting the people together, getting the people all connected at the front end of the initiatives to make sure that we're looking at this holistic approach. And as Chris said, your phrase was portfolio of projects. Yeah. Is looking at where do all these things intersect, and what are the potential benefits some of the other areas can get, not just finance, not just actuarial, but if we get to this end state, what are the additional benefits we can get? Who else is going to be impacted directly or indirectly? One of the things we found as well is that there's a huge variance in the understanding of what this is all about. So depending on where your area of focus is, you may have a very narrow focus and very narrow understanding, or it may be broader. But there's going to be differences of understanding within the organization, as well as differing priorities. My goal this year is to do X. I've got this major project, this transformation on the plate for the next 2 years. Don't bother me. Right. But the reality is we need to connect those priorities to make sure that we're not, to use the great phrase, ripping up the road more than once. So really important.
Just to On the bottom of this, you'll see one of the QR readers. So we've actually developed a microsite. So if you scan that QR, it'll take you to our microsite. And what we've begun to do, and we'll get this into this in the subsequent pages, is we've taken each one of these bubbles and thought through the considerations from their point of view. What is it that they're worried about right now? What is it that they should be thinking through as sort of changes in the environment? And then more importantly, which I think is the thing that's a little bit different than we've looked at it in the past, is what are the interdependencies with the other stakeholders on the wheel? Who should they be talking to? How should they be handling this? Who should they be considering as they begin to think through this?
One of the other things those pieces, those point of views have, and again, you'll see them if you go to the reader, is what does each function from that perspective view as a modernized function? And I think that's interesting because we spend a lot of time talking about insurance modernization holistically, but that's just the compilation of what does modernized look like at an initial cut individually, right? So I think that's just an interesting point of view that happens to be in those pieces as well.
Yeah, and one of the things I find interesting there is the pieces that we've prepared. It's nothing new, right? It's not, when you look at what the CFO's concerns, if you're in the finance area, it's not something that's going to surprise you. You've heard all those things. It's a matter of bringing the pieces together from all of the different segments.
Absolutely. So looking at this, just to take a couple of different views of this, and looking at it from the actuarial perspective, they're dealing with a whole bunch of different initiatives right now with reporting. They're dealing with risk and capital. The timelines for reporting have changed in many cases. There's more information needed, more metrics, and so on. Everyone's going through some kind of a modeling exercise, whether it's on new risks that they're anticipating. Some of the regulatory requirements are doing different models as well. Things like ORSA coming out and so on. So there's a lot of different things that are happening here around this. And if you look at each one of these bubbles, we could go on and subset all of these as we go through here. Certainly Kristen and Chris have a better idea what some of these bubbles are, but every one of these things are being worked on somewhere. But if you look at these bubbles against that big wheel we just talked about, you'll find a number of these different things will impact other areas as well. So again, it goes back to this overlay of all the different projects and so on. Do you want to add something on?
Yeah, so obviously this takes a piece of the stakeholder wheel and starts to just break it down for particular impacts for that stakeholder. And I think what's interesting is organization by organization, the level or the magnitude of each of these impacts is scalable, right, is going to vary significantly. And this may not be a comprehensive list of the impact at your particular organization. But I think it's important up front to really understand what is the scope and the population of the impacts, and then to start to prioritize that. We're working with one company now specific in the actuarial function around process improvement. And again, it's very much focused not necessarily on the regulatory, not necessarily on data, but specifically on the process and the people who support that process, and how, manual versus automated, where are the controls, what's the duration of time to get specific tasks done in the actuarial function. How much of it is spent on, to your earlier point, gathering data and actually doing the analysis that you would expect the actuaries to be doing. So the impact is really broad across each of these stakeholder groups.
Yeah, and I'll move over to the Chief Financial Officer, and same type of thing. There are different concerns, right? But they're all concerns of that Chief Financial Officer. But if you were to kind of one for one match that up to what we see from an actuary's perspective, you'll see a significant overlap. I guess one of the cases I'll talk about is we've got a client where we were engaged from the finance area to do sort of a finance transformation look. We were also hired totally separately, different teams, by the actuarial folks to do kind of the same thing. We fortunately kind of worked together on that, and we have an account team where we said, hey, we're doing this, we're doing that. Don't those two roads converge? And we ended up having to kind of bring them together themselves, right? To say, these are kind of the same project going on in different areas. And one's certain, as we come up with these actuarial factors and these actuarial calculations, they're certainly going to lead into finance, right? And it's interesting. They've been in sort of 3 or 4 month journey with them, getting them there, but they're now totally ingrained, and it's one project moving forward with kind of a common vision. I think that's our poster child right now.
But what's even more interesting about that is when we started with the actuarial, which was after the finance, as Chris said, the amount of finger pointing that was going on was, I mean, I guess not surprising, but unbelievable, right? Well, I can't do that differently because finance doesn't give me the information in the right way, or they don't show me this. And you talk to the finance folks, and it was like, well, what are the actuaries even doing? I mean, there was a lot of that basic finger pointing. And I think to your point, if it had continued down that silo, because it started this way, you start to say, oh, well, let's just fix this bubble, and let's, if I'm actuary, let's assume what I'm getting from finance is status quo and I can't change that. Or if I'm finance, let's just assume the way the actuaries work is off limits. And I think the more we helped them to connect, and they did connect, we started to say, let's give and take a little bit here so we can improve the finance function and improve actuarial processes, which was a big win in a shorter time frame for them.
Technology still isn't in the boat, so now we pick on them instead. But they're easy to pick on, right? So.
But it's those ongoing impacts. It's if finance makes a change without discussing with actuarial, then what's the impact there? Or if they, or starts an actuarial, what's the impact? And if I'm fixing technology through a different set of outputs for metrics, whatever, how does it impact both the organizations? So it really becomes almost obvious if you think about it, but it's not obvious when you're in your silo.
Right.
Yeah, because I would say outside of the last 9 months, we haven't seen organizations take a more of a holistic view. But we really have started to see a trend where folks are trying to tie these things together, moving forward, breaking down those silos. Anything specific on technology?
Well, we talked about the technology piece of this, because I sort of, in my mind anyways, I view sort of risk, actuarial, and finance as sort of core functions with the technology running across the whole bottom, if you will, okay, right through. And as Chris just said, in all of these kind of initiatives, you need to get the whole IT area engaged early.
Right.
And too often we see sort of, as Chris just said, IT's not at the table yet. That happens, all right? So we've got the initiatives already underway, already in flight without really engaging technology in that. But IT's got all these individuals, all these stakeholders as customers, right? And they really need to be engaged up front to make sure that these initiatives are not impacting negatively one area over the other. In fact, we're doing it, going back to the analogy of only ripping up the road once. So you put these four pieces together, and there's lots of other examples that we could probably bring into play here, but really we see the major impacts here, starting up with the four areas that we've been talking about, or RAFT in our I guess we could use it the other way around. I like the other acronym better maybe. But the risk, actuarial, finance with the underlying technology going through there, and you've got the handout so you can read through these things together. Just some examples of where it might impact. But it really is a broad, holistic view of why this can have a huge impact. It's really pervasive, and as we said earlier, these projects are in many cases in flight already. It's a matter of sort of just stepping back a bit and saying where are the intersections, where do we get maximum value from this, and if it's just a pure compliance in-flight project, how do we as an organization gain from that effort and major expense in many cases?
Yeah, and I think as you read through these things, right, these are certainly the things that are going on within the industry that are impacting each of the different areas, right? There's probably a laundry list that's not on here, but these are the bigger ticket items that we've seen organizations say, this is why we're changing. These are the reasons why we're trying to get to this change. And as you can see, there are many interrelated components.
Yeah, so at the risk of reiterating what we've said multiple times, I think that might be the biggest message here, right? There's a lot of words on this page, but ultimately I think as you read through this and some of the other materials on the impact to the various functions, there's a lot of recurring themes, right? So the impact cross-function is certainly significant, and that supports the reason that we're suggesting you look at this holistically.
Great.
And if you go, Chris mentioned the QR code going to the microsite. There are several of these already produced. There's more in the works right now, so I would encourage you to check back over the next few months to see what's out there.
What we started with were some bullet points on the who, the what, the where, the when, the why on each of these, and what we've done as a team is really write a 3 or 4 page paper on each one of the different stakeholders. Those are currently being published. The first set of those, I think, will be up there next week. So just some interesting reading. And certainly, it's what we've seen organizations do is use that to say, hey, to the CFO, hey, here's a different way of looking at this,
Yeah.
or just to kind of use as educational materials. So, like we said, we've approached this from a lot of different ways. Kristen's going to take us through just some of the general approaches that we've got and what we've seen, or how we've seen organizations getting started.
Yeah, so we've spent a lot of time talking about how big it is, what it means, how broad the impact is. My question would be, so how do we get started? Where does this really start? How do I make it more practical? And what you can see here is that, and we've talked a little bit about this, the port of entry is very different for different organizations and the way that different organizations start. And even when we talk about looking at insurance modernization holistically, we're not suggesting go out and attack your risk, actuarial, finance, technology, HR, PMO functions all at the same time, right? That is unrealistic. The point, though, is that there are multiple areas and projects where you can get started. And, as we look across this, I think it really is based on what are the other needs of the organization. We have some organizations who are on their way to a target operating model. And so it's really about making sure that target operating model isn't just for finance, but that it broadens itself. Or if you look at some of the technology, IT, and data, you've got data cleanup all over the place within various functions, and that's ongoing already. But it's really making that more broad to make sure that data cleanup leads to enhanced technology solutions, which can be accomplished more holistically. So,
Big T, little
big
T.
T, little t. This has been something that we speak with our clients about all the time, and you see the somewhat shortcomings of looking at transformational little t change versus transformational big T change. So really what we're saying here is this little t transformational change is really saying, okay, we've got these discrete projects, some of which are ongoing, some of which we need to get started. They're happening all over the place, so we are looking at this holistically, but in a very siloed approach. And I think while that is so much easier to get up and running, you need less stakeholders involved, you need less buy-in, the investment is smaller. It makes sense that companies are starting that way. But what happens is the specific projects drive the overall vision rather than the vision driving the specific projects. And so if you flip and look more at transformation with a big T, you move away from band-aiding problems and identifying where the issues are and doing a quick win because the actuarial function just needs to save time or the finance function needs to save money. So rather than taking a band-aid approach, you start with more, let's define our strategy, our holistic target operating model vision, and then let's address what's the phased approach to get us there. We're not going to do any of this overnight. So how do we start by looking at what those discrete projects are? So at the end of the day, you have both discrete projects and division. It's just a question of which drives which. And we've recently worked with a client who started very much in the small t because I think there were a lot of projects going on already. And okay, if we add a couple more, we'll drive towards our vision. And I would say maybe 4 or 5 months into us being there, we had a visioning session, which was really to say, what's not being recognized holistically is each of these projects isn't driving at one consistent vision. You're driving at multiple visions. And so we quickly, took the needs and the expectations of the organization, redefined a vision, and then redeployed the projects that were being done beneath it to get there.
Great.
So longer term approach, I guess I would say there is timing on this slide. It's very scalable, right? Not every organization is going to take this amount of time to get through the initiative. But I think the key message here is really around you've got to start with mobilization and ultimately get to optimization. And how you do that varies organization by organization. What we've seen many companies do is the mobilization, really getting all of the stakeholders that Byron talked about involved, setting the vision, and then understanding what the current state is, how does that compare to the target operating model, what are the misses there, what are the gaps to get there, and developing a roadmap for how you go about making those technology, finance, process, people, whatever changes along the way.
Yeah, I think that on the mobilization thing, the way that we organized around this, it was the same kind of thing was prevalent in our organization. We have different pieces, actuarial, finance, consulting, regulatory. What we ended up doing was getting ourselves together and having what we call a catalyst session, right, where we facilitated it and got to one common view, so we had one common voice as a firm around this, because if you talk to different folks within our organization probably 9 months ago, it was different than it is today. And was the common voice that this was the common approach that we came up with based on all of our cumulative client experiences.
I think one thing that, in talking to Kristen and some of the U.S. team, the last slide there is that no one is taking this whole page and saying,
no.
Let's go do this, right? But they're all, as has been said many times today, is this point of entry. Where are you on here? But if you have the vision, then you know where this fits.
Yeah, I want to get to the client that says, "Come modernize me."
Yeah.
I have unlimited resources and budget to do that. We've yet to see that hit.
So we've talked a lot about mobilizing. I mean, what Chris just said, we did it internally to get ready for this initiative, and clients certainly need to do that as well. And I made the point earlier that the whole approach is scalable. I think, and Byron talked about the number of stakeholders. Mobilizing is really just getting everyone on the same page and buying into the fact that you're going to invest, take the time around this effort, whatever the time duration. So that's just an important piece of it. We've covered vision multiple times. There's some specific questions in the materials you have, but again, it's really defining the vision, not in a silo, not for a particular function, but at least across the 4 key raft functions. So we've obviously been working with clients for quite some time now around pieces of insurance modernization, and I think this is some really beneficial information. I won't spend a lot of time on this, but some of the major pitfalls that we've seen companies come across as they're trying to both initiate and execute on an insurance modernization initiative. And the first 3, very high impact around unclear strategy, leadership void, and lack of program definition. I mean, there's no rocket science there, but I think it's very easy for a company to just start, and those could be the pitfalls of that entirely by not having the collective buy-in, the right tone at the top, et cetera.
I think the second one down on the solutions around identify some places where you get some quick wins. With the project we were talking about before, we had actuarial and finance. They had a simple spreadsheeting thing where they had 70 different spreadsheets that they had, and actuarial that were governing their things. They brought it down to 24 or something like that. Find those places where you can make those quick wins and gain some momentum around the transformational effort. So I just think it's something to think through. One of the things that we've developed are what we call maturity models. What we've done is come up with kind of level 1 through 5 from initial, repeatable, defined, managed, and optimized. And then we've worked with clients to kind of say, okay, where are you from an industry perspective? Are you a large client, small client, medium-sized insurer? And then where are you on that spectrum compared to the industry standard, right? And what this has been enabled clients to do is really take a look at, okay, so perhaps I am, at a defined state within finance, and I want to get to the managed state. What we haven't seen is that, we're not saying that industry standard is optimized every place, because there are a lot of barriers to getting to the optimized state from a cost and just overall. Doesn't make a lot of sense to get there. But if you're a 3 in the finance area and you're only a 2 in the actuarial area, well, guess what? You can't really get to that 4, the managed area in finance, until you begin to bring your actuarial up. And if your technology pieces are all the way down in the 1-2 range, which is what we've seen with a lot of organizations, you end up not being able to move the ball on a lot of these other things because they're so reliant upon data. So just something to kind of think through. This is one of the things that we've used with clients as a sort of a current state assessment as to where they are versus the industry standard. What we've got is a maturity model for each of the different raft functions. This is definitely an eye chart up on the page, but it's provided in the booklets. And what we do is we take for each function of the raft, we've got a framework like this that says, okay, here's kind of how you need to be thinking through these things. We've got a much more detailed set of criteria that you need to think through as you begin to level set where you are. And what we've done with organizations is give this framework to them to let them level set themselves, right? Because the last thing that we want to do is come in and say, oh, you're a 2, and have people think that they're a 4, right? So we kind of let them look at the criteria and say, okay, this is kind of where we are as a culture and as an organization, and then benchmark one another against that. So that's it. And Alan?
Yes, thanks very much, guys. I think that was great and informative. I think, as I promised, we would open the floor to some questions. Trying to keep everybody on time, so any questions that you may have, the team would be happy to answer. Yeah.
So I guess my question is, if you have a big T approach and a holistic approach, then who typically would lead that modernization in the organization from the RAF crew?
So that's a great question, and the answer is it depends, right? We've kind of seen it all over the place. You know, I think the 2 chief drivers of it would be actuarial or finance. You know, so it could be the chief actuary or the chief financial officer. Yeah. But to say that, it's like Kristen said, we've had to come in from HR when they're trying to really understand roles and responsibilities. So it's been a little bit of all over the place. That's what made us get together as a group, because we had it coming in from the actuarial. We had it coming in from risk and regulatory. We had it coming in from the accounting side. So we said, okay, let's figure out how we have one cohesive approach to this. So it really depends on the culture of the organization and who kind of buys into this and how they sell it throughout the organization. I would say that as we're obviously doing some of these engagements right now, the conversations that we are having to folks where they're trying to get there, it's helping them educate the internal stakeholders to get them on board. I was just up in Maine talking to an insurer, and we came in through the actuarial door, per se. And the chief actuary was totally on board, but knew that he needed to get the chief financial officer for the funding and to get him bought into the whole transformational effort. So it's kind of across the board.
I think fundamentally, though, the one comment you made, and when you looked at some of the lessons learned and some of the challenges, it's about making sure there's clarity around that vision and clarity with the key stakeholders as to what we're trying to achieve.
Right.
And with that in place, often the discussion as to who's ultimately going to lead this is much simpler because everybody is on the same page.
Right.
Right.
Other questions? Yep.
So you seem to be advocating going with a capital T transformation if you're going to look at the whole organization holistically. However, by increasing the scope and increasing the range of the transformation, you're also really, I think, increasing the risk of failure or non-completion or time run-ons and everything as well. So what do you kind of try and put in place to really minimize that risk, raise awareness of it, and also, with any kind of a transformation like that, you have a huge human change component that you have to address as well.
Yeah. So one of the things we've definitely had is we've got our people and change. We've certainly included the people and change kind of around, just like IT. I think that they're just as integral to this. I think we talked about having the small wins. I think breaking it up into here's the project and managing it that way is certainly something that we've seen is to, okay, here are the different pieces that are going to get us to the end game. And here's why we need to complete those in order to get to the end. But I totally agree around, you've got a bigger risk for failure because you've got more moving components. That's why we think building some type of, structure where you have all the impacted stakeholders and not just at the right levels involved to make sure that they can continue to drive, and if things slip and it's part of their responsibility, they can quickly put the thumb on somebody and say, hey, we need to get this done. It's a priority for this organization. So I think having that, I hate to say program management mentality around here's the different pieces and here's how they fit into the end, and having a pretty stringent kind of monitoring mechanism on that is pretty important from a budgetary perspective, from a completion date perspective, and from a level of effort, right? You need to get people to commit those resources to get this thing done, right? And that's the resourcing piece internally we see is a huge issue, because there are, you know, we're still making widgets every day, right? So you need to run the business. This can't be the only thing. However, in saying that, if you don't do this now and you don't have the analytics that other organizations have, later on the operations are going to suffer as a result of that. So you need to get them to that line of thinking as well. Anything you guys want to add to that?
Just on the change management, I mean, you bring up a really good point, and it's not intended to be downplayed, because obviously this is a huge organizational change, and there's people impacts to it, obviously, which are, you know, certainly the piece that you want to manage. We're working with one client who has a pretty sophisticated but not over-engineered change management process. There's change agents within every business, and there's communication from the core to make sure that there are trusted people within the business who are kind of conveying the change message. And they started doing that early, and they do it often. And I think that's certainly just been a proactive way to get ahead of the change that's inevitable.
I think that the last point is that, you know, if you take the small T approach, then you have a different set of risks. The risk is you'll be doing things independently and they don't always work out. So if you, as Kristen said earlier, if you do small T and let small T projects drive the vision, there's a set of risks. But if you have the big T vision and then define projects, they're smaller, defined, and whatever, and have success on those small projects, you work towards the vision. So I think that would some mitigation aspect there.
Yep, over here. You're next.
Thank you. This is excellent, of course. I think of it this way. I think of actuarial, finance, risk, operational as the foundation for, as serving design of product, pricing,
Yep.
underwriting, distribution, one or more channels, sales, and claims, which is about reputational and more enhancement of revenues. How do you integrate these functions in what I'm regarding as the absolutely essential foundation you're speaking of?
So I think getting those stakeholders' concerns on what, you know, as we change the organization and as we get better access to data, you're not just going to use it for the risk and the actuarial and the finance. You're going to use it across the organization, and you're going to give them the metrics and the availability of that data to be able to make those operational decisions that they don't necessarily have today. And you know, as we talked about getting that whole wheel in the boat to really begin how you're going to plan this and getting them a part of this steering committee. I think one of the things that, you know, the corporate functions, I'll call them risk and actuarial and finance, haven't done historically is get those folks in on the front end and think about those considerations. I think that, you know, that steering committee that you have, or whatever group you want to call it, needs to have participation and high level input, you know, senior level input right from the outset as to how you're developing the target operating model. Too often, finance and actuarial projects are more about reporting and less about getting the information back to the operations, right? And those are the guys who are making the decisions that are making money for the company. So I think that getting them involved early and often and getting their input and what their concerns are and how this is going to impact that part of the organization is absolutely essential. And you know, I think that that's, it's certainly a challenge, but I think that you have to really begin to play at that level.
I think a key piece that we talked about and where this comes into play is around that upfront development of the overarching strategy and vision that's leading into your target operating model. You know, all too often, clients, and you know, I'm working with a number of clients today, they get very focused on, you know, what am I doing for finance and actuarial? What is the operating model they're going to look like? And the vision hasn't been articulated. And the vision is really built around the business drivers. And that vision includes all those stakeholders, and it provides then an understanding of, at the end of all of these things, what do we want to achieve? What is the traceability then back to the initiatives that I'm doing in finance and actuarial, so that they not only enable the benefits within those departments, but they also contribute to that ultimate vision that incorporates all the things you talked about: product development, sales, marketing, and so forth.
And Chris used the word education, and I think that it's important to get that education throughout, because if you think of traditional initiatives in an organization where, a finance initiative wouldn't think necessarily historically of calling up the distribution guys. It just wouldn't happen, right? Like, why would I do that? Right? It doesn't make any sense. So, but now if you take the bigger picture, this is why I think the big T is important. If you take that big picture all the time, you go, okay, will this impact distribution? Should I call the guys in? Should I call the claims people in? Should I call the underwriters in? How will this impact them? If the answer is no, well, fine, move on. But at least we engage them up front and look at that. So that's where that education piece is really critical. If we're doing these things, how does this all fit together? Right? Right.
We had one more question over here. No? No.
Oh, sure. Okay.
Within the banking industry, there has been a big push on the concept of risk data aggregation, and you talked about different points of entry into companies when considering insurance modernization. Mm-hmm. In your experience with your clients, have you seen that as one of those points of entry?
Yeah, we certainly have seen the risk as one of the points of entry. A lot of the organizations we worked with, risk and actuarial are very closely linked. And what we've seen is they're trying to almost sync up how they're looking at things, because they have a lot of the same kind of common metrics, common data needs to be able to do the analytics. So we've seen that as one of the points of entry. It hasn't been the most popular one, frankly. I think actuarial is probably, if I had to rank them, actuarial is probably number one. The actuaries are most concerned about this because they kind of understand the changes that are coming and how it's impacting their organizations. I think finance is probably a very close second, and I would say risk is probably the third. So,
I've got time maybe for one more question. Yeah.
How do you ensure that by doing this whole process, you actually look forward? So instead of doing a more solid foundation for what we're currently doing, better analytics, et cetera, and compare what's happening in other industries, how we keep ourselves future focused, how we use predictive analytics and start to build the new operating models that we're starting to see come in insurance and probably more particularly in other organizations?
Yes, I think that it's around building that your target operating model, right? Figuring out where is it that you as an organization want to be, and as you begin to, as we talked about earlier, right? As you begin to get your handle on data within the organization, how can you use that not just from the risk and finance and actuarial perspective, but how can you use it as an organization to better, help serve your clients, right? How can you begin to use some of the trends that you now have access to, right? Because as we know, there's a ton of data that insurance companies accumulate. It's a matter of kind of harnessing it and doing that and building that into that target operating model, saying, okay, we want to build the analytics to be able to predict the number of accidents or the number of catastrophes, whatever it is, right? If you're a P&C carrier or even on the life side from a predictive modeling perspective. So I think that it's a matter of building those types of concepts into your operations and the target operating model for operations and distribution or whatever else it is. I think that's really what you want to add.
And this is where, at the end of the presentation, the team talked about some of the maturity models that we put together. These are great tools. They don't, give you the silver bullet, but they're great tools to open those discussions. We're currently in this position. Industry norm is here. Do I need to be at the industry level, or do I need to be beyond that? How does that tie to my overarching vision and strategy? And when you start looking at those models, as you're building your target operating model in each of those functions, it helps you at least open the door to those discussions to think about what is it going to be in the future and how are these initiatives going to help me get there.
Yeah, I think that's a great point, Alan. I think that it's got to be, the only reason you're doing the current state is to figure out when you build your target operating model, how far do you have to get to get to where you want to be, right? I think that's, you don't want to spend a lot of time counting the beans. You want to figure out, here's where we are, here's where we want to get to, here's the plan to get there across the spectrum. So.
And that just speaks to how important the vision is, and therefore how big capital T transformational
Right.
changes. So you're starting, so thank you. You're starting with the point on let's define the vision to be all that we want the vision to be. And it can be how strategic we want to be, how tactical we want to be, but what is that vision, and then driving the target operating model obviously at that.
So the bell has been ringing. We try our best to make sure we let you go on time. The next session will be in the fall, so you'll have a nice break over the summer. I hope everybody enjoys the weather. At your seat, you'll see some feedback cards. If I could ask you to take a quick second and fill those out, it's tremendously important to us. It gives us the right feedback and ensures that we can continue to deliver presentations that are on point and valuable to you. So thanks so much for attending. We will let you know the specific dates around our next session and topics. And feel free, there's still some food and snacks left if you haven't quite filled up yet. Thanks very much. Thanks, guys.
Thank you.
Timing?
Yeah, worked out well.